Welcome to the show. I'm really excited to have this conversation with you.
Good morning, Felicia. Really grateful to be here and connect with you and your audience.
Where in the world are you today?
I am located in Sarasota, Florida,
Okay. And you're hanging out there today. How's the weather?
the hurricane capital. So they're eyeing another one, but I'm just praying that we're not going to have three this year. So
Yeah, yeah, yeah.
outside of that, the weather's amazing.
Good. Good. Sarasota's north. Where's Sarasota in Florida?
On the Gulf Coast, so western
Okay.
side, just south of Tampa.
South of Tampa. Okay.
Yeah.
Okay. All right. So, Dave, let's get into this. I generally start everybody with the same question of how did you learn about money? And, you learned one thing, most of us learned one thing as kids, and then we change that over time. How did you evolve to where you are today? What were you taught? And then how did you get to where you are today?
Sure. Well, I was raised in a middle class family in Connecticut, Felicia, and I was taught that the recipe for success was go to school, get good grades, you're going to get a job, and then life would work out. Right. So
Yeah.
I followed down that path and then had the opportunity to serve my country in the Marine Corps. I did the ROTC program and learned some things in the Marines that they don't teach you really anywhere else in the world, things such as leadership, integrity in teamwork. And shortly after the Marines, I got into the corporate world and I was in the tech industry and really quickly got frustrated with the bureaucracy, losing that sense of purpose and that sense of mission around creating impact for others in the Marines. And at the same time, my wife and I started raising a family. We had an 18-month-old who was ruling the roost. We were trying to figure out that one. And then on October 24th, 2000, we literally had triplets and quadrupled the size of our family.
Wow.
And I can tell you, Felicia, holding three babies in my arms and looking into their faces, just it really struck a chord with me that I have got to the paternal instinct of I've just got to provide for financial security for my family. So the first thing I did was I went to see my financial planner and
Uh-huh.
he said, put your money in your 401k, max out your 401k. You have kids, you can put it in things called 529 plans. And I became so frustrated with that advice that's like, okay, I'm only going to grow my wealth at a rate of 7%. I'm just never going to get out of this game and never going to have freedom. And I had a big vision for myself. So at
Mhm.
that point, I started investing in all kinds of alternative assets and real estate. I invested in single family, retail, raw land, office parks, multifamily syndications, oil and gas, all of these types of investments. And fast forward over 20 years, that went really well. And I decided to build my company today, Pantheon, to really help limited partners really understand how wealth works, create really a blueprint for them to understand how you can pay less in taxes, how you can grow your wealth with multiple passive income streams, all using this alternative wealth strategy so you can really live that amazing life you always dreamed of.
Yeah, I love it all. I'm going to back up just a little bit from you were talking to your financial advisor and something clicked that this is not the answer to the question, but and then you jumped right into investing in alternative assets. What was the runway to getting to there? Because many people talk to their financial advisor and don't, it's like, this is going to take forever. I got to work till I'm 65, 70, and I want to be done at 50. How do I change? And then many go like, okay, there's no way. I don't know how to do it and stop. What was your pathway to get into something different?
Yeah, I mean, there was a big light bulb moment when I read Kiyosaki's work, and specifically, I really enjoyed Cash Flow Quadrant.
Mhm.
When he just in a very simple framework was able to describe that if you wanna pay less in taxes, have no cap on your income, right? You need to become a business owner and an investor, right? Because the rest of us are employees, and I was at the time, right,
Yeah,
paying maximum amount of taxes, trying to save what I could to then earn 7%. It's really
yeah,
like the equation doesn't work. So
yeah,
that was really the transformational moment that I knew I had to get on that side of the quadrant. And I did become an entrepreneur. I built a tech business, which I ultimately exited after 15 years. But thinking entrepreneurially and also trying to become an investor was really that big shift.
we've used the word entrepreneur several times, and I can just see my doctor friends out there going, "Well, I can't do this because I don't have time to be an entrepreneur. I'm a doctor. I don't have time." So can we talk a little bit about what that actually means when you're talking about being an entrepreneur?
It's interesting. We have so many docs in our practice, and everything from emergency medicine to orthopedic docs to dentists. And I think one of the biggest risks as a doc that they've expressed to me is that what if you're not able to practice medicine?
Mhm,
What if you
mhm,
become disabled for
mhm.
some, reason, right? Or you become sick or something happens like that. That's a lot of risk, right? In addition to all of the debt that, docs have to take on just to get into that position, it's really hard. So creating passive income is really big. And when I talk about like being an entrepreneur, to me, it means asking questions, right? It
Mhm.
means being open minded. Because if we just listen to our financial advisors who said, hey, the only way to invest is with stocks, bonds, and mutual funds, you'd really be at the whim of that. But once you start asking questions, you realize that, hey, is it a really good idea to defer my taxes, for instance?
Yeah,
Right? I would rather pay taxes on the seed rather than the harvest. And when you understand that the way Wall Street operates, it's this assets under management model, which is they make money whether the market goes up or down.
yeah,
If they have your capital, they're making fees on it, even when
yeah,
you're losing.
yep.
Right. So it's really important to be able to start asking questions, asking why, and start to think through some of those things. Right. So I think that's very important. And it's very similar with health as
Yeah,
it is in wealth.
yeah.
Right. Because we learn a lot of things and there's a certain dimension that we can learn there. But there's so many new things, right? With regenerative healthcare and stem cells and functional medicine, there's so many new areas, right, that are really amazing. But again, if you were to maybe listen to someone in the medical profession years ago that was very old school on something, you may be stuck in that sick care paradigm. It's really the same with wealth, right?
100%. And I heard entrepreneurs ask questions. So if you're asking questions, you have an entrepreneurial mind. You open your mind. And what do we do every day, docs? We ask a ton of questions. We have a patient in the office. No, we can't figure out what's going on until you ask a bunch of questions. Lawyers, you're great at asking questions. So we all are entrepreneurs. It is not necessarily owning a business on the internet or owning a store. That's not entrepreneurship. It is doing something. Investing can be your business. That makes you an entrepreneur. So just I wanted you guys to not tune out because you thought we were just talking about people who owned brick and mortar or e-commerce businesses. We're talking to everybody here. And the back to the part about not being able to work. So it could be you that's disabled, it could be your kid that's hurt and you need to spend more time with your kid, it could be your mom, it could be your dad. All of these life things happen and nobody talks about that. We get taught go to school, get a job, save for retirement, and then whatever, and keep working through all that life stuff that you don't want to work through because you want to be taking care of your family. So getting this passive income, what Dave and I are talking about, lets you decide how you want to work. Okay, great. You did this in a holistic way. Let's talk about that. You wrote a book called The Holistic Wealth Strategy. How is the way you invest holistic? Let's talk to people about that and how it becomes that way and what does that mean to you?
Yeah, so I spent a lot of time with ultra high net worth individuals, family offices, and I've really been studying for over 2 decades this whole concept of wealth, right? And at some point, you get to a level where adding another zero to your balance sheet is really not going to materially change your life, right?
Mhm.
So when we think about wealth, obviously there's this financial component that we have to it. But outside of that, you have other dimensions. You have spiritual capital, you have emotional capital, you have physical capital, you have intellectual capital, right? So all of
Mhm.
these other components, I think, are really core to having holistic wealth. And if you peel back the layers to that, I think what most of us are after, it really comes down to freedom. We're really looking to have freedom of money to do what we want to do in life, whether that's take a 6-month cruise around the world or spend more time with loved ones. It's freedom of relationships, right?
Mhm.
To have deep and meaningful relationships with the people that you care about and become more connected. It's also having freedom of time, right? To choose when you want to spend your time, right?
Yeah.
And
Yeah.
also purpose, right? And I've talked to so many docs who've, and sadly, they've lost some purpose, right? Because
Yeah.
they feel like they're just in this machine, in this system that they're just stuck in there.
Yeah.
But
Yeah.
when you can actually change the paradigm to waking up and being fascinated and motivated about the work that you do, because maybe you're not so reliant on that financial income because you've created passive income to do that, it becomes really empowering. So I think
Yeah.
this is really all about freedom, Felicia.
I agree. I agree. For me, when I knew that when I had an admin person coming down and sitting in front of me and talking and hemming and hawing about sound like they didn't really need me anymore and feeling very empowered when I could say to her, if you don't need me anymore, all you need to say is you don't need me anymore, and I will walk out the door. And feeling comfortable that I could take care of myself. Things will be fine. So that knowing that I'm going to work because I want to go to work is amazing to me. That I want every person to have that feeling. It's like this is an option. I don't have to do it. And it would make medicine and law, it would make all these things so much better because people are doing it because they want to, not because they have to. That's amazing to me, that having freedom of choice. So this gets down to the why am I investing? And I know you guys probably when you start working with investors, you really get them down to that why so that they can be really involved and stay in the game because if you're just doing it for the money, money is money is nice. It's 100%. We like looking at zeros in the bank account. It's great. But what does that get you? What do you want that money for? What is it? What are you really, really going for is what's going to keep you motivated. And when things are not going well, it's like, okay, well, we lost on that one. How do we get back to how do we get back in? Because this is what I really, really want. I want to be able to spend time the way I want to. And that's my thing. Is mine is time freedom. Some place freedom too. I like that one too. Being able to do whatever I want to do whenever I want to. That's what I call retirement, you guys. Somebody asked me, "But you're not retired." Oh, yeah, I'm gonna say I am because I don't have to do anything. I can do what I want. That's retirement to me. All right, Dave. When you talk about your holistic wealth strategy and getting passive income, how do you start your conversation with investors? Say somebody calls you at Pantheon and you guys are just getting to know them. How are you getting into what they're looking for?
Felicia, it all starts with creating your vision and getting crystal clear on where it is you're headed.
Yeah.
And sadly, I think in this world, we're all so busy raising families. We're at work. We're getting bombarded with social media, texts, all these things coming at us. But it's really critical to spend some deep work and truly understanding what it is you're looking to get out of life.
Yeah.
Because that is going to give you the clarity to start breaking down walls, to start creating ambitious goals that you can really going after and then moving the pieces on the chessboard to align with where you want to go, right? A great question for people to think about is if I could wave a magic wand right now to change your financial life and to improve your life, right? What would that look like for you?
If I could wave a magic wand and change anything in my life, what would that look like? And most of those things do involve some money to be able to do the things that I really want to do and serve the people I want to serve and leave the legacy that I want to leave. But it's not just the money. The money is a part of it. And so that's what we're talking about is finding your why, how you got to dig in there and get your vision of what you want your life and your legacy and your children, your family. What does that look like to you? And then we can map out a plan on how to get there. And a lot of the plans aren't something you have to, once you get to that vision, the plan's going to take care of itself. Once you know where you're going, you'll be on the road. And unless you decide to change directions, then you don't really have to that you're on the road and going and think you're paying attention. And when you invest with someone off Wall Street, you get to have conversations with that person on a regular basis. I don't know. I've was on Wall Street with my 401k and I never talked to my whoever was investing that money for me. When you were in corporate, did you talk to your financial advisor on a regular basis or whoever was investing your money for you?
Well, I'll give you an interesting statistic. 88% of financial advisors, according to Spiva, cannot beat the S&P 500.
Mm,
So what is the value that they're providing, right? You can go on these robo advisors these days if all you're trying to do is dollar cost average and be in the market. But I can tell you multiple other things, right? If you're investing in securities, number one, you have the highest amount of risk, right? People think of it as low risk, right? But
yeah.
it's actually high risk because you wake up one day and the market is down 5% because something happened in China that who knows? All the fundamentals were great. You have no control over it. You pay the highest amount of taxes on that. And let's say you have $1,000 worth of Tesla stock. The only thing you're really hoping for is for it to go up in value. But in
Mhm,
reality, it could go sideways, it can go down. And if I compare that to, let's say, a multifamily real estate asset, for instance, we can win. It's really a trifecta in investing, right? You can win three different ways because you can reduce your taxes. You've got tax efficiency to that income. You can drive passive income to it and start taking, income today. And then you're also forcing appreciation into the asset. So the asset value is growing. And then if you really compound this over time, and I'll further really demonstrate just a really simple example for your listeners, Felicia, just really think about. The traditional financial planning model says that you're going to build this, according to accumulation theory, you build to this number. So let's just say the number is 4 million. You get to 4 million by retirement. And then they say that you can withdraw 4% a year. That's their
mhm,
model, which is even less today. But 4% of 4 million, that's 160,000 now that you have to live on. But they never really talk about taxes, fees, and inflation, which we really know are real today. So
mhm,
maybe that's more like 100 and 110K that you're
mhm,
actually living on.
mhm,
And now let me compare that to if you had that same $4 million portfolio across real estate and private equity assets, right? We could likely, and I'm sure you could validate this, probably easy enough to get an 8% return out of real
mhm.
estate and alternatives. So now you've just doubled that cash flow from 160K to actually 320K. Ideally, it's all tax efficient, so you're paying no taxes on it. And then, oh, by the way, your total value of your assets continues to scale each year by at least 10%.
Yeah.
Okay. And that's how you create legacy wealth. This is how family offices, ultra high net worth, this is how they're building worth. That is the recipe. But the other model with traditional financial planning is really broken.
And back to tax efficiency, our 401ks are not tax efficient in the long run. You gotta pay taxes on that when you start taking it out, and one of my mentors always said, "Now do you think taxes are gonna be higher in the future or lower in the future?" And it doesn't matter who's in the office, in political office, the taxes are gonna be higher in the future because what we need in the country is gonna keep the prices are gonna keep going up. So, saving money on your taxes now and all along the way is the way to go. That is our biggest expense, and many of us spend so little time thinking about our biggest expense. We spend more time thinking about $5 overcharge on our cell phone than all those taxes we're paying every year.
Well,
Um
well, just think about this, Felicia, right? And again, like I talk to a lot of docs, right? Who, especially if you're in California, you're in New York or New Jersey, you're getting creamed with taxes, right? In
Mhm,
addition to
mhm,
the state taxes, everything that you have. So if you could, and we look at return like an ROI in a particular investment, and you're saying, hey, I can do 7.5% in the stock market. Maybe you're doing some individual picking and you think you're doing great at 12%. But what if I could lower your taxes by 20%, right? So you
yes,
take 20% and then start to put it into something like a real estate, you're making 15 or 20%. And
mhm,
now you've got a 35 to 40% ROI in a year, right? So we have an oil and gas investment, and most investors don't realize that 100% of an investment into oil and gas is actually tax deductible against your active income. So in 2024, let's say we're estimating about 92% in this thing. So if you invested 100K, you'd have a $92,000 paper loss, which reduces that income. So you can effectively bring yourself down a couple of tax brackets and actually have an investment, right, that's going to have a nice yield to it and diversify from the stock market. So,
Yes. Yeah. That's one of the best things about oil and gas. If you don't want to have to think so much about multifamily and property, oil and gas, especially if you have big W-2 income, is the way to go because you're going to write it down right away. Whatever you put in there, there's a huge write off on that. Why? Because the government wants us to invest in that, and we can look at the tax code and know what they want us to invest in, and because they're giving you tax breaks on it. And that is why you want to work with people who are all over that. You have a team. I'm sure that Dave has a CPA, wealth management team, all those folks on the team that can talk about what there are the tax efficiencies in this particular investment. Besides oil and gas, Dave, what are you guys investing in?
yeah, so another one we like right now, which has actually been a favorite for billionaires in the past 5 to 10 years, is we invest in merchant cash advances, which is essentially providing alternative lending to small businesses that are growing
Okay.
because they're doing well. They need additional capital. And so let's say here in Sarasota, we just had the hurricane and you've got a roofing company. If they go to a traditional lender, it might be 6 months to get new funding for that new truck that they needed to keep up with demand.
Yeah.
Well, we can fund that with our underwriting process. We can fund that inside of a week. They get the capital that they need to then go capture that revenue. And now we're making up to 20% on that, even more that we're giving returns to investors because they're paying a premium for that money that comes back into us and then that gets recycled into other loans and everything. And so the way the economy is headed right now with the new administration, I think there's a lot of strength for small businesses to do well. And this sector has been growing actually by 20% for the past 15 years since it started.
Which
Um,
sector? Small business or the
no,
investing?
actually lending, this
Okay.
alternative lending
Uh-huh.
space.
Okay.
So I think there's going to continue to be opportunity in there. And again, it's another way to diversify from Wall Street with a non-correlated asset. And also the macroeconomic fundamentals are very strong, right? So we can invest where businesses need capital, really the lifeblood of the country, and bypass Wall Street to invest in Main Street.
I'm gonna go back to that. This idea is really interesting to me. So you raise money in a fund, and then a business knows about you, comes to you, says, "We need some money because we need to buy whatever, or we need," and you underwrite that business like they can pay it back. And because you can do it quickly, the interest rate on that loan is where the money is being made?
The interest is tip average around 34% to the applicant, right? So they're paying a premium for that money, but the average loan is only 7 months. So they pay it down really quickly. And again, in that example was a perfect example because they need money really quickly
Mhm.
because they've got so much demand. So they're
Right.
still profitable. They pay it off really quickly. And the way our business model works is we raise capital and kind of work educating our investors on some of these alternative strategies. And then we will typically pool our money into one fund and then we invest as an investor. Because a lot of the investments we do, the minimum investment is 10 million.
Mm,
So we can get access to these institutional quality deals,
mm.
but an investor can come in for as little as 50,000.
Okay.
Yeah.
That's pretty interesting, investing in small businesses in that way as debt rather than in the venture capital kind of way as equity where the business might not even make it. This is you're helping an existing business expand by lending them money. Mm.
Yeah, and the loans are collateralized, and also we're first in line to get paid. As the principal and interest payments come in daily and weekly, we get
Mhm.
paid on the end of the credit card.
Hmm.
So,
Interesting. I like that one. I don't think we've talked about that one on this program before. What other things? So you have traditional multifamily, yes, oil and gas. This, what did you call this one? I'm going to say
yeah,
lending in small business.
merchant cash advance. So we really focus on 3 core sectors. We focus on energy, real estate, and the private credit and private debt. And again, why we like these is because they're all non-correlated to the stock market. We invest in real assets. One of the opportunities we had earlier this year was a 380 unit condo building in South Florida. That's a build to rent. And that was very strong, 3.5x return in just 4 years. So, really good fundamentals. And the opportunities that we're really sourcing, I would call them invisible opportunities where most people just don't even see them. We put it
Yeah,
together with a family office or another kind of institution, and then we can share that with our
with the
investors.
investors.
Yeah.
Are you guys working with non-accredited investors or only accredited investors at this point?
Most of these opportunities are for accredited investors only.
Okay.
So, yeah.
Okay. How do people get in touch with you? Because I think there's a lot of excitement going on with Pantheon Investments. So I want to make sure people know how to get in touch with you.
Sure. I think the best place, if you like some of the concepts here, I'd be happy to provide for your listeners a free copy of our book at holisticwealthstrategy.com. They can
Okay.
just go there and download a free copy of the book.
Okay.
And we'll have contact info. We can connect through there as well. But the book is really like a blueprint, right, of how the ultra wealthy build their wealth. And we've just touched lightly on a couple of these phases, but really it's all about putting this strategy together, right, of buying hard assets, creating passive income, reducing your taxes, right, and using all these alternative strategies that you may not have actually heard before, but they're very commonplace in the ultra high net worth universe.
And the thing about it, guys, if you don't take your blinders off and open up and start asking questions, you never see this stuff. There are things, people are doing things out here in the world that you're like, oh my gosh, how come I didn't know anything about that? Because nobody wants you to know. We want the traditional way to make money is to go to work all the time, run that hamster wheel, and put your money in a 401k so somebody else is making a lot of money on it so that when you retire, you can live below your means, live below the way you've been living all along, pay more taxes, and then hopefully they want you to die as fast as you can. I know that sounds terrible and conspiratorial, but that's really how I feel now you know me. Check out Dave's book. This stuff is amazing. They talk about insurance, they talk about investing in passive things, they talk about finding your why. Get all of these things are important. I know if people are doing things besides sitting down, writing down how to get things, so it'll be in the show notes. Say it one more time, Dave, of how they can get your stuff in case somebody is actually writing it down.
Holisticwealthstrategy.com.
Okay. Open your eyes. And Robert Kiyosaki's Cash Flow Quadrant is also an excellent book if you haven't read that one. Rich Dad, Poor Dad, the basis of that whole thing. It just opens your mind, doesn't give you a lot of strategy, but opens your mind to money and how money can really work for you and get you to where you really want to go in life and what you want to leave to your family and to the world. Dave, thank you so much for being on. I really appreciate it. We'll have all your contact information in the show notes so people can get with you because I think Pantheon Investments is doing some amazing things. And Dave and his team are really top notch. So check them out, you guys. Thanks a lot. I'll see you next week.